Hello, welcome to this episode of Rich Insights. I'm Don Rich, Head of Investments for Esoteric Capital Markets. Today's topic is on the ECB Bazooka. All right, now they surprised the market. The ECB surprised the market this past week by announcing a much larger stimulus plan. Right, it's a bond buying plan. It's part of quantitative easing. The market was expecting about 500 billion. And the ECB came in at 600. All right. Wow. Some are referring to that as the bazooka because that's a major step for the ECB. Now, of course, the Fed took drastic action much earlier, but now we get the ECB following suit. All right. So let's go through and try to figure out what this actually means. We're going to start here on the charts. Here we have the 2-year spread between Italy and Germany. All right, and again, it goes back, you can see, to January of 2008 and where we're at today. Again, the black dotted line tells us where we're at today. But the important thing in this chart is how much the credit spread is tightened in. Right, it has tightened significantly. Now we're on the order of 80 basis points difference. In other words, the world is, the investment world is only assessing 80 basis points premium right now to the Italian debt versus the German debt. All right, and that is down substantially from where we were just the last few months here. All right, now it's not only just on the short end of the curve though. Let's flip the chart here. Here we have the 10-year chart. Again, the full history going back to 2008, but let's just focus on the very recent events. Right? It's come in substantially. All right, that is huge. That is huge. All right. So what's happening here is you have to remember in Italy, the bond market there is what some people refer to as being very incestual. And by that I mean the banks and the pension funds hold a lot of the government debt. So if the country gets in trouble, then the banks and the pension funds are in trouble as well, right? It's an all or none sort of thing. So what happened this week with the ECB expanding their bond buying program, that was able to further diversify the sovereign risk from the Italian residents to the non-residents, right? And of course, the biggest chunk of the non-residents, the way it works in the European zone, is Germany. They have the largest representation. All right, so that was a big step. Now, what else happened? Right, credit spreads came in. They came in across the entire curve. What else happened? Well, let's take a look at the slope. Here we see the 2s, 10s yield curve slope in Italy. In the eurozone, and we can see. It steepened a little bit, but not substantially. Not substantially, right? There's not much of a story here. It doesn't seem to have tremendously affected the growth or inflation prospects of the Eurozone going forward. All right, so it was great for the credit spreads, particularly the Italian credit spreads, not so much for growth in general for the Eurozone. Here's what else it was, though, folks. Here's what it was. It was a currency market. Excuse me. Here we're looking at the euro-dollar exchange rate. Again, going back to 2008, we have daily observations in the blue line, and the black dotted line is our most recent observation. Here we see the euro strengthening dramatically here. Really, it's dramatically. The euro strengthening against the dollar on the back of this ECB announcement. All right, that's real important. That's real important. Now, there are many things that can affect the currency market, so we should go one step further here. Let's take a look at euro-yen. All right, the previous chart was euro versus dollar. This is a cross rate on euro versus yen. And again, same thing. The euro is strengthening dramatically right now. All right, so clearly it is a euro-based phenomena, right? It's not coming from the dollar. It's not coming from yen, right? The two safe haven currencies. something in Europe's going on here, right? That's what it tells us. So, why is the currency market reacting, so aggressively? We saw it in the credit spreads, the sovereign spreads, and we see it in the currency market. What's going on here? Well, the euro skeptics, right? Those that are betting against the survival of the euro had a huge step back. Last week. All right, so that explains a lot of it, right? That explains the currency market, and it explains those sovereign credit spreads. Now, it wasn't just the ECB, right? The ECB had a $600 billion plan, and again, that got all the headlines because the market was anticipating $500 billion, and Chairman Lagarde came through with $600 billion. All right, but that's not all that was happening. There was also there's a proposal for what's called a recovery fund. All right, a recovery fund. It's a EU-wide fund. Again, it's being proposed. It's not been authorized yet, but it's for $750 billion. All right, so the ECB was 600. This is 750. This could be much more important, but it's not been passed yet. It's still under speculation, but the market was getting excited about it. Now, out of that $750 billion, they were going to use $500 for immediate grants, and then $250 of it for loans. Right? That was going to be the $750. Now, again, the problem, we don't want to get too excited about this one too early, because 28 countries still have to authorize it, and getting 28 countries to agree on anything is going to be difficult. So we had the ECB with $600 billion, possibly the recovery fund was $750, and what else happened? Germany passed a $130 billion stimulus package. Now that's passed. All right, that is passed. But the stimulus package in Germany is a little bit different than the U.S. Right? This wasn't helicopter money or something we're more commonly used to. This was for tax relief and incentives to buy electric cars. All right. So it's a little bit, it's going to take a while for that money to get into the system. But again, to recap, the $600 billion from the ECB is going to be in play for sure. The 130 for Germany specific is authorized. They're going forward with it, and then possibly an additional $750 billion in that recovery fund we talked about. So, big news out of Europe this week, right? That's why it's called the ECB Bazooka. And that obviously gave rise to this improved risk sentiment, particularly in Italy and particularly in the currency markets here. All right, so that's our message for today. I'm Don Rich. You've just experienced a rich insight. I hope you've enjoyed it. May your beer be colder than the company you keep. We'll talk again soon. Thank you.